Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The AI trade pushes Asian stocks to a new all-time high, even as the absence of an Iran deal drives a rebound in oil. The US and Iran both look for changes to their draft ceasefire agreement, while Israel expands its ground assault in Lebanon. Plus, Nvidia's PC push. The world's most valuable company takes on Intel, announcing a new chip for laptop and desktop computers. Well, a very good morning. Happy Monday. Welcome to a new week. This is the picture in markets as an Iran deal remains elusive. So stocks batting off the geopolitical uncertainty in Asia. They're being driven by AI. And in fact, shares across the Asian continent smashing through to new all-time highs this morning. So the MSCI Asia Pacific Index up more than 1%. Also getting a boost from US futures pointing higher. You've got Nasdaq futures up 0.6% at the moment after Wall Street benchmarks closed at records on Friday. The SOX, it bears pointing out, the Philadelphia Stock Exchange Semiconductor Index on pace for its best quarter ever. Now, where we are seeing a bit of downside this morning is in Europe. Futures here pointing down by 0.2%. And if we flip over cross-asset, you can see a bit why. Because oil is up from a 6-year low. Traders minding events in the Middle East. Brent now trading up more than 2% at $93 a barrel. This is the headwind to the AI enthusiasm. And that oil rebound reviving concerns about energy-driven inflation. So Treasuries falling across the curve, yields up, for example, on the 10-year by 3 basis points at 4.46. Now, the dollar, the haven of choice of this conflict, of course, is also slightly stronger for the first time in 3 sessions. So we're up 0.1% on the Bloomberg Dollar Spot Index. Now, let's take a look at the risk events on the docket for today. At the top of the hour, we'll get the latest nationwide house price data for the UK, followed by, at 3 p.m, ISM manufacturing numbers stateside. And then after market close, it's the HP enterprise earnings, with the bar set very high after that blowout Dell report last week. Well, let's set you up for the day and the week ahead. We begin in Asian markets. Given that they're defying the geopolitical uncertainty, let's go straight over to Winnie Xu and see what she's watching. Winnie, what's going on where you are?
Yeah, good morning, Lizzie. Well, the big story for Asia still is in tech and AI. As you mentioned, the MSCI Asia made another record today, driven by that AI rally. We have South Korea's Kospi here leading gains, with Samsung, in fact, seeing a target price boost from Goldman Sachs on that memory chip crunch. Now, we also worth mentioning that SoftBank here on the screen, you can see up more than 12%. And it is, in fact, on track to overtake Toyota to become Japan's most valuable company. So you can see how this AI boom is really reshuffling these industries structurally. Now, you also flip the board and take a look at what's going on in the Taiwanese market, because we have the Computex going on, and with Nvidia's Jensen Huang now unveiling a new chip for the PC market. It's really been boosting Taiwanese PC makers here up about 10%, as well as MediaTek also up some 5% on the announcement of the collaboration with Nvidia to make such new chips. Now, you also flip the board and take a look at what's going on in the currency space, because it is showing a bit of a different picture, a bit more worries when it comes to the geopolitical tensions. Hence, we are seeing that strength in the US dollar pressuring currencies in Asia, with the Japanese yen here getting closer to that level. We watch out for the intervention risk, as well as the won continue to underperform Asian peers because of this forced selling going on with the rally that we're seeing in the South Korean stocks. Now, when it comes to China, we just got that set of data with the private factory gauge seeing a bit of a slowdown in May compared to the previous month. And that goes to show how the overall economic strength remains quite weak and not providing so much of a support when it comes to the currency. Back to you, Lizzie.
Winnie, thank you very much. That's Winnie Su in Hong Kong. Well, let's dive into the geopolitics now, shall we? The US says that it's conducted strikes on Iranian radar sites over the weekend, while diplomatic exchanges continued between the two countries. Meanwhile, Israel has expanded its ground assault in Lebanon, shattering a brittle truce with its northern neighbour. We can get more now with Paul Wallace, Bloomberg's managing editor for economy and government in the Middle East and Africa. So, Paul, the Trump administration seems to be selling a looming deal, but Iran seems to remain reticent. Who should traders be believing?
Hi, Lizzie. To be honest, I think they're both a bit reticent on the final terms. I think both sides, broadly speaking, do want a deal. Trump and the US have made that very clear over recent weeks. And I think the Iranians do want something, but they both seem to be holding out. Probably trying to negotiate the final terms, whether it's the exact details over how the Strait of Hormuz will be reopened, or how much and how quickly Iran's frozen funds abroad will be unfrozen, and this type of thing. But I think the trend is definitely in the direction of a deal, even with these skirmishes we're seeing, like the ones only a few hours ago that saw the US fire upon missile launch sites and Iran react by firing at the US base that it says carried out these attacks. So it is quite hard to square those things, but it does seem like we are still heading towards a deal. Whether it will be in the next few days, whether it will take a bit longer, we don't know. But clearly both sides do seem to want to get to that point.
But how do you square Israel's ground assault in Lebanon, growing as it is, and real bellicose language coming out of Israel?
Very much. Now, Israel is, further, its troops are further into Lebanon than they've been for about a quarter of a century. It's definitely a complicating factor because we have to remember that Iran said that it wants a ceasefire on all fronts, and that includes Lebanon, where Israel is fighting Hezbollah, which is pretty much Iran's most important proxy group in the Middle East. However, Iran has not complained much about Israel's deeper incursion over the last week or so. And in fact, there is a lot of thinking that it's telling Hezbollah to carry on striking Israeli troops and civilian areas in northern Israel, because those attacks with drones and the like have been pretty intense from Hezbollah as well. So it's unclear what's going on there, whether Iran thinks this is a way to squeeze out better terms from the Americans, or whether it's sort of this is kind of seen now as a separate front that's not that connected to the US-Iran talks. We'll have to see, but certainly that war in Lebanon, you would think, could complicate the talks between the US and Iran.
So we've talked about Lebanon, we've talked about the Strait of Hormuz. What about the other two key sticking points here? Frozen Iranian assets and also the nuclear file, of course.
So of the assets, the Americans haven't said much about this. They're trying to downplay it because any release of frozen funds is not going to go down well with a lot of right-wing Americans, including some people within Trump's MAGA base. Iranian media is talking about $12 billion having to be released as soon as there's an agreement an agreement for an interim deal, and then another sort of $12 billion in a month or two after that. So we'll have to wait and see on that. In terms of the nuclear program, I think the thing they're negotiating right now is Iran's stockpiles of highly enriched uranium. The US wants those destroyed or diluted, possibly taken out the country and sent to a third state such as China or Russia. Iran publicly is reluctant to allow that, it wants to keep hold of that HEU, highly enriched uranium, but there does seem to be movement, and there do seem to be signals they can reach an agreement on that. In terms of Iran's future enrichment, that's a huge and very complicated matter, but that looks like it will only be discussed after there's this interim peace deal. So the sides will go into deep negotiations about Iran's future enrichment only once they've got this interim deal in place.
Paul, thank you for the update. That's Bloomberg's Paul Wallace live from Dubai. Well, as a result, we've seen oil climbing from a 6-week low as the outlook for a peace deal to end the war in Iran becomes uncertain once again. As Paul says, Washington and Tehran have traded messages over the weekend seeking changes to this draft agreement that would extend a ceasefire and open the Strait of Hormuz. But it's unclear whether much progress is being made. Now, this, as former National Security Advisor John Bolton says, that President Trump's push to amend the peace deal with Iran is to get gasoline prices low for the midterms.
Well, I think Trump is getting what he wants. This is a deal about gasoline prices at the pump in the United States. Trump worries, obviously, about the price levels people are paying. He's worried about the effect on inflation. He's worried about the effect on the elections in November. But this is not a deal that really ends the war in a satisfactory way for the United States.
Let's get more on the oil perspective. We can speak to Anthony De Paula, our Middle East energy markets reporter. Anthony, good morning. So you've still got oil pretty elevated. If traders aren't pricing peace yet, what does the price suggest that they are expecting?
Good morning, Lizzie. Yeah, I mean, we've seen a big drop-off in prices since most of the region here went on vacation last week for the Eid holidays. So we come back and we're seeing oil at about $93 a barrel, which today is up from a real low on Friday, as we failed to see any real progress in that deal going forward. So oil is still pricing in that uncertainty there. But what we're really seeing, rather than pricing in peace or not peace at the moment, what we're really seeing is that the price is reflecting the fact that those cargoes of important crude oil, natural gas, and refined products are not passing through the Strait of Hormuz. So we're still seeing that major blockage there in Hormuz that is keeping a lot of those tankers, some stuck in Hormuz that were there before the start of the war, and it's really preventing new tankers from getting in. So we've seen a drop-off in production in the Gulf. We've seen a drop-off in refinery production. And so that means that vital crude, the jet fuel that will be important for the European summer, the diesel, that's still not coming through. And so that's what we're seeing in the prices. We're going to see some reactions up and down as we do get more coming out of the peace talks and the potential talks over this ceasefire. So we will see some headline reactions to that, but we're really seeing oil pricing in that continued disruption of crude and other fuels coming out of the Gulf, which is super important for global economies and the oil market, Lizzie.
OK, Anthony, thank you very much. That's Bloomberg's Anthony De Paula, Middle East energy markets reporter. Still ahead on Daybreak Europe. Nvidia's CEO enters the PC market with new chips for Windows, loosening the stranglehold of Intel. But first, Jay Powell's first public comment since leaving the Fed chairmanship, warning about the central bank's credibility. More on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:15 a.m. here in London. Well, the former Fed Chair Jerome Powell used his first public comment since leaving the role to warn that the central bank's credibility could be damaged if politicians are able to remove officials over policy disputes.
If any administration finds a way to remove Fed officials over policy differences, then future administrations will do so as well. The public would lose faith that the central bank will make decisions based only on what's best for all Americans. The Fed's credibility would be lost. Credibility has been built and sustained over many decades, and we have a duty to safeguard that priceless asset for our fellow citizens and for generations to come.
Let's bring in Bloomberg M Live strategist Mark Cranfield now for more. In the flesh, here with us in London. Welcome, Mark. I wonder, how much do we care about what Powell says anymore? I saw a note this morning saying, yes, there was no market reaction now, but if the credibility of the Fed keeps being challenged and there's a leadership crisis at the Fed, maybe then we'll care a bit more.
We're quite a long way from a leadership crisis at the Fed. The new chairman has barely had anything to say yet. And really what investors care about is how Walsh is going to manage this situation between short-term expectations that inflation is relatively high, might stay high for a long time, But then eventually the risk to the US economy that things start to slow down as people rein in spending. So it's balancing those things. And how is he going to deal with the dissent within the Fed? We've seen a pretty rare case at the previous meeting where we had almost as many dissenters as we're used to having in the Bank of England. We've never seen that in the Fed before. So Walsh has got a pretty tricky job here. The things that Powell is saying is things that he said before, talking about independence, credibility, those issues which he stands for. They're certainly important. They're not going to move the needle in the markets in the very short term. Investors want to know, how is Walsh going to deal with the dissent within the Fed, and how's he going to get everybody on board to make the right decision going forward from here?
So we've got various bits of data coming out from the US this week. The highlight will be the jobs report on Friday, expected to show more resilience in the labour market in May. What would we need to see for traders to price in a more aggressive shift higher in rates from the Fed?
Well, the unemployment rate is 4.3. It's expected to stay pretty much the same. If there was a surprise drop, say it went to 4.1, for example, we saw it one time last year where it suddenly dropped like that. Traders would go, oh, the employment situation is much stronger than we were anticipating. And you would probably see the yield curve shift up quite a bit on the back of that, because it would bring the urgency forward that not only have you got inflation numbers going up, now you've got the jobs market even stronger. So at the moment, traders are not expecting the Fed to change rates this year, but they are in the first quarter. They're looking for a potential hike in the beginning of next year. They could well bring that forward maybe to the fourth quarter of this year. But it would need to be quite a big change in the unemployment rate. Otherwise, people are going to immediately start moving on to when's the next inflation report, what does that mean? So yes, it's a big number, but it needs to move quite a lot to really get traders excited.
Okay, Mark, great to have you with us this morning. Mark Cranfield, Bloomberg MLive strategist. Now to some other top stories we're following this morning. The UK Prime Minister Keir Starmer is being forced to publish hundreds of private exchanges between disgraced former ambassador Peter Mandelson and members of his government. Mandelson was ousted from Starmer's team after Bloomberg revealed new details about his relationship with the paedophile financier Jeffrey Epstein. The disclosure could illuminate the circumstances surrounding Mandelson's vetting process. Elsewhere, the Mexican President Claudia Sheinbaum has stepped up her criticism of what she calls US interference in Mexico's domestic politics. At a rally in Mexico City, she claimed efforts to destabilise her government have intensified since the deaths of 2 CIA agents in April. Sheinbaum pointed to US charges against 10 Mexican officials, including the state governor of Sinaloa, as the most serious example of intervention so far. So those are some of our top stories from around the world. But coming up on the programme, the Iran war is disrupting more than oil flows. It's also squeezing the chemical feedstocks that make everyday plastics. We'll get you that story next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, we all know that we're paying more to drive our cars and book holiday flights as the Iran war pushes up fuel prices. But another part of the story is each oil barrel is equally important to our lives. Chemical feedstocks are key to making plastics for packaging, the automotive and pharmaceutical industries, and a whole range of everyday products. Philip Hertz, the oil analyst at Bloomberg NEF, one of them, I'm pleased to say, joins me now. So thank you for coming on so early, Philip. The closure of the Strait has really had this huge impact, as we know, on global plastic and chemical markets. But what's it meant specifically for Europe?
Right. So there are 2 points that I would want to make for Europe, but starting off with the global picture, because you already compared it to road fuel and jet fuel, but really the impact on chemical markets is actually bigger than for jet or road fuel. If you look at the overall picture and you take ethylene as the case, which is the largest base chemical embedded in plastics, packaging, etc., you talk about probably 25 to 30% of global volumes being lost. So an incredible amount. Now, the second point, and tying that back into Europe, is that everything happens with quite a severe delay. So the entire impact has not really fully materialized yet. It would first materialize in Asia, because that's really the principal market affected by the feedstock disruptions. And then only further down the line would it affect Europe, which then would have to divert more chemicals to Asia to compensate for that shortfall. So we're not there yet.
So how hard has Asia been hit already?
Pretty hard. I mean, if we talk about, depends on the market, obviously, but if we look at the Asian producers outside of China, South Korea, Taiwan, Singapore, Japan, India, etc., and we look at what the state of affairs was in early May, we're talking about less than half of production really running as per usual. So a lot of volumes there being lost already.
Okay. And then, so what are we looking for the months ahead for European chemical markets?
Yeah, right. So here again, key theme being it happens with a severe delay. We had a lot of mitigating factors so far. Also for Asia, we've had a lot of inventories to run through. So we talk about the feedstock inventories, but also the chemical polymer inventories themselves, crude oil inventories. And plus, on top of that, while the strait has been closed since early March, you still had a lot of shipments arriving until late March. So a lot of the impact still has to materialize. Next couple of months, currently, as things are standing, it's pretty hard to not see how chemical supplies could not be more tight than they are now. Consequently, more pressure on chemical prices, which, to be fair, are already at 70 to 250% of 2025 prices. So they're very elevated, but it has not really transpired for consumers yet. So most likely, the argument is pretty hard to not make that you're going to see elevated consumer prices across different products over the next couple of months. 1 to 3 quarters.
Okay, which brings us back to the CPI story. Philip, thank you so much for bringing us this research. Philip Hertz, oil analyst at Bloomberg NEF. Well, the Bank of England Governor Andrew Bailey says that British banks are still locked out of using Anthropic's powerful new AI tool, Mythos. Speaking in an interview on Bloomberg TV on Friday, Bailey called for an international approach to fighting cybersecurity threats.
The spillovers from this sort of from cyber risk are so big that we can't just have a single sort of national approach towards dealing with the consequences and mitigating it. There's got to be an international approach to this. It's got to be a sensible, sort of firmly based international process, because I think anybody who thought, well, I've dealt with my banks, that's okay, I'm afraid that won't work, because they're all so heavily interconnected. We've got big payment systems, big messaging systems, so that approach won't work.
Now, as chairman of the Financial Stability Board, you're obviously involved in lots of discussions around sort of global efforts on financial stability and looking for risks. And one area, again, where people are looking nervously at the US in particular is the run-up in private credit, and whether there should be more of a sort of a tougher approach to at least having more reporting requirements or other things on private credit. You've highlighted that a lot of traditional banks and institutions are now very much intertwined with private credit. Is that, I mean, are you getting a hearing on that from the US in terms of the risks of that?
Excuse me, yes. I think, look, first of all, private credit is playing an important role. I think it's a good thing. Let's come back to AI for a moment. We've got a very big investment demand going on for it to support the innovation in AI and in the tech sector more broadly, and private credit is an important part of meeting that demand, and that's a good thing. What I think we have to look very carefully at is the word private can be misleading in some ways, because it is not an island on its own. It is connected into the system, into the broader system. A lot of the underpinning liquidity will come from the banking system. It is connected into the banking system. That's not bad. That's inevitable. So it's very important that we understand those interconnections, how they work. Are there points of sort of fragility in there? That's why at the Bank of England we're doing a second system-wide exploratory scenario to follow on the one we did on hedge fund activity and major government bond markets a couple of years ago. So that's the first thing. The second thing I think is important is, and I think this is particularly true with the spread into sort of so-called retail investment, is do the investors understand the assets they've got and the characteristics of those assets? Because there are clearly, there are some signs of strains in the market. I think they're often described as idiosyncratic. Okay, every incident will have a different story attached to it. But we are seeing some increase in requests, quite a big increase in requests for outflows to take liquidity out. And I think how that plays out will depend on what investors think thought they had relative to what they sort of now think they've got.
Bank of England Governor Andrew Bailey speaking there to Bloomberg's Stephanie Flanders. Plenty more coming up. We'll talk defence next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The AI trade pushes Asian stocks to a new all-time high, even as the absence of an Iran deal drives a rebound in oil. The US and Iran both look for changes to their draft ceasefire agreement, while Israel expands its ground assault in Lebanon. Plus, Nvidia's PC push. The world's most valuable company takes on Intel, announcing a new chip for laptop and desktop computers. Well, a very good morning. If you are just joining us, 6:30 a.m. here in London. This is the picture in markets as things stand. Asian stocks are battling the geopolitical headwinds, the uncertainty in the Middle East, but AI driving shares to new all-time highs on the MSCI Asia Pacific Index, now up 0.8%, so pairing some of the earlier gains, but also sentiment getting a boost from American stocks. On the Nasdaq 100 futures, up 0.5% after we already saw a record close on Wall Street benchmarks on Friday. Now, where there is a bit of downside is Euro Stoxx 50 futures down 0.25% now. And if we flip over to the cross-asset picture, we can explain a bit more of why, because we are seeing oil higher, up from a 6-year low. Traders bearing in mind the events in the Middle East. So Brent now up 2.4% at $93 a barrel. That feeding into concerns about energy-driven inflation, so Treasuries falling across the curve. You're looking at yields up on the 10-year by 3 basis points at 4.46, and the dollar is stronger again today. The haven of choice, of course, of this conflict, so up for the first time in 3 sessions. Now, let's take a look at the front pages this morning. The FT leading with the story that broke in the past hour, the news from for Windows PCs from Nvidia. The paper saying that it means the semiconductor giant's going head-to-head with Apple, Qualcomm, Intel and AMD for the first time. So the FT reporting that computer makers including Dell, Asus and HP will use what Nvidia claims is the most efficient PC chip ever built and pair it with Microsoft's Windows software. Let's flip over to the New York Times, shall we? They're assessing the latest on the talks to end the Iran war and President Trump's influence in global politics. So the headline is Trump hits the stalemate phase of his international interventions and it stings. The paper concluding in Ukraine, Gaza and now Iran, President Trump's early declarations of easy wins have given way to harsh reality. Finally, let's look at the Washington Post. This morning, they're leading with the US property market. And the headline is, Desire for privacy is slowly killing this symbol of the American dream. The paper saying that trends are changing dramatically and saying a picket fence in the front yard once signified middle-class neighbourliness, but hardly anyone buys them anymore. Well, you can get a roundup of all the stories you need to know to get your day going in today's edition of the Daybreak newsletter, which terminal subscribers can find by going to DAYB Go. Well, let's turn to defence now. And Pete Hegseth has avoided mentioning Taiwan during a speech at the Shangri-La dialogue over the weekend. The US Defence Secretary sought to convince US allies that staying quiet is the best way to project American strength, as he hailed newly stable ties with China and praised defence allies in Asia.
There is rightful alarm regarding China's historic military buildup and the expansion of its military activities in the region and beyond. We share a clear-eyed assessment of that security environment and a mutual understanding that a Pacific dominated by any hegemon would unravel the regional balance of power and undermine the equilibrium we all seek to preserve.
Let's get more now with Bloomberg's Jill Desis. Jill, I wonder how much America's quieter stance on Taiwan is a win for Beijing, actually.
Yes, well, this was a really interesting speech, Lizzie. I think that, the first thing to keep in mind here is that of these types of speeches given by a defense secretary from the United States, this is the first time in at least a decade that Taiwan hasn't been mentioned, and actually a pretty sharp shift from what Pete Hegseth himself said just a year ago at this event when he mentioned Taiwan a handful of times. I think the other piece of this, too, that's really interesting is the fact that this is coming just a couple of weeks weeks after that Trump-Xi summit in Beijing. During that event, Xi was cautioning Trump over mishandling the Taiwan situation. So I do think that that's the kind of thing that kind of plays in the back of your mind when you're looking at how exactly Pete Hegseth, other U.S. officials are talking about Taiwan on the world stage, or at least in this instance, maybe not talking about Taiwan. Now, what Hegseth has said is that there's a certain approach that the U.S. is using here when it comes to diplomacy, that the stance hasn't really shifted. It's more of a matter of how they sort of talk about things and present things publicly. But yes, I think you're right that it's hard to not see this as a win for Xi when, again, he just came off that Trump meeting, having those words of caution, and now you don't see that kind of forceful language coming out of the U.S. that you might have seen just even a year ago.
Also, Jill, it seems kind of ironic that the US is stepping up cooperation with Japan and the Philippines, but also criticising European allies of being moralising agents of drama. How do we square that?
Yes, well, Lizzie, I think there's a couple of things to really sort of keep in mind here. Obviously, this all sort of unfolding against the backdrop of the Shangri-La conference in Singapore. It does seem like the Trump administration is putting a lot more focus on sort of that Indo-Asia kind of element of its international diplomacy here rather than Europe. But I do think the other piece of this is that, you look again at that Hegseth speech. While he didn't mention Iran explicitly, it's hard to divorce that from this idea that the Trump administration is quite frustrated with a lot of its European allies over the Iran war, over their inability to use some European, sort of bases and such for U.S. presences, including in Italy. So I do think that some of those frustrations with Europe and NATO writ large may be playing into that a little bit. But it is interesting to kind of see how all of that unfolds on this world stage.
Jill, thank you very much. Bloomberg's Jill Desis there. Well, let's get some of that European perspective now, shall we? Germany's top defence official said that while Europe's rushing to rearm, it needs time and clarity from the United States in order to do so. Carsten Breuer also told us that China missed a big opportunity by not sending senior military officials to that Shangri-La dialogue in Singapore.
It's my fifth time I've seen the Chinese delegations on big numbers and also on small numbers. It's important for me is always that the dialogue is keeping up, that we are able to talk, that we are able to communicate. The size of the Chinese delegation is very small this time, and it's also very low ranked. So I think China is missing an opportunity here to talk within the region, but also to other partners, to other militaries, to other politicians.
Let's talk about Europe. He was pretty critical of Europe. He was praising the Asian allies. I guess the numbers don't really add up because Europe has ramped up its defense spending. What else do you think Europe can do to kind of bridge the gap and perhaps reverse that relationship with the U.S.?
Well, hearing the speech from Secretary Hegseth yesterday, I was probably leaning a little bit back, only a little bit, because what he offers as limits, as lines where we have to go, I must say we are fulfilling this with the German military, with the German army. So the defense spending in Germany is at this stage. We are ramping up enormously. When Secretary Hegseth last year was here, he was talking about even Germany is doing this. We understood the message. We understood what we have to do, and it's not only Germany, it's also other countries.
Are you concerned about capabilities gap? We know that Europe has said that it will be able to defend itself by the end of the decade. I'm just wondering, in the meantime, where are the vulnerabilities? Where are the capabilities gaps? Some say nuclear could be an area.
For me, it's important that we are in a dialogue about this. So when we are talking about capabilities, we need a roadmap. It's clear that the U.S. is seeing their main effort now here in this region. But what we have to do is, if they're taking capabilities out, we have to mitigate those capabilities. So it has to be clear, it has to be transparent, and there has to be a roadmap in what time frame we have to do. So this is a kind of a little bit of a European dilemma. What we are facing. We have all understood that we have to take care of our security on our own, that we have to take over more responsibility, but we can't build up the needed capabilities that fast like it is necessary. So this process has to be designed, it has to be steered. And on this priority, it's ISR, which is on top of the list. It's capabilities in the airspace. It's a capability in space. It's of course air defense. What is in there? It's digitalization, where we have to get much more ahead of what we are doing. So multi-domain operations comes to mind. It's deep precision strike weapons or long-range fires. So this is the top priority, if you will. So, but I'm a little bit reluctant to talk about priorities, because priorities, when you set priorities, you probably don't look into what is necessary. So we have an underspending in defense budget over years and years. So we have to fill the gap, to build up a baseline, and then starting from there.
So that was Germany's Chief of Defence, Carsten Breuer, speaking to Bloomberg's Haslinde Armin. And Haslinde also got to speak to NATO's military head, saying that the alliance is in good shape when it comes to member states' defence spending. Admiral Giuseppe Cavo Dragoni, speaking to us also at the Shangri-La Dialogue, talked about President Trump's demands for Europe to rely less on the United States. Let's take a listen to that as well.
We had a message loud and clear a long time ago. I think that we react. We had a commitment, a strong commitment in The Hague to reach the 5% by 2035. We are on that path. We are progressing on that. We are just doing it. We have a NATO defense planning process to give us the capability that we need, and we will acquire that in time. So I think we are in a good shape. And of course, we as a military side, we don't have any drama going on.
It does seem like there's a lot of aggression in the comments. He talked about how Europe and NATO are weak, delusional, plagued perhaps by immigration. Do you think those comments are justified?
Well, I think that in the past there has not been the proper balancing of responsibility, of burden sharing, financing, and also, authorities' responsibility. We are moving on the good direction now. I think that a good reassessment and redistribution of responsibility and burden sharing is necessary. So, but we are on that pathway, and I'm satisfied the way the alliance is responding.
What are you willing to do, and where are the red lines? Because we've been told that drone attacks, for instance, have escalated. Is that not enough to prompt a response from NATO?
Again, a strong and mature alliance need to be able to handle also the escalation. We need to manage that. We need not to overreact. We need to, first of all, try to set dialogue, if you can, just to clear up, just to be sure that it is a mistake and not an aggression. Something is happening right now, and that's basically it. An attack is going to start Article 5. You know that Article 5 has already been called by the United States after 9/11, and we answer pretty quickly. So that's the way it could happen.
NATO's top military official speaking to Haslinde Armin as well there. Well, speaking of all of these things, coming up on the programme, SpaceX's IPO is reshaping Wall Street before shares even start trading. We'll get you more on our deep dive story next. This is Bloomberg.
Introducing RTX Spark. Everything we've learned over 33 years distilled into one chip. Blackwell RTX GPU with 6,144 CUDA cores, 1 petaflop of AI performance. A custom 20-core Grace CPU built in partnership with MediaTek. Fused by NVLink. 128 gigabytes of unified memory. TSMC 3 nanometer process. 70 billion transistors. and in close collaboration with Microsoft, a Windows platform for agents. We're reinventing the personal computer.
Well, the Nvidia CEO Jensen Huang says that the RTX Space Superchip will launch in laptops and desktops from brands including Dell and Lenovo later on this year. And it's a fresh shot at the PC market with a new chip designed for AI-powered computers. The processor combines computing and graphics capabilities and will run Microsoft's Windows for ARM software. The move pits Nvidia more directly against Intel as it looks to expand beyond its dominant position in AI data centers. And Huang also gave an update on one of its key AI processors.
Here I am standing in front of you. Vera Rubin is in full production. Vera Rubin is in full production. The supply chain we created for Vera Rubin is twice as large as Grace Blackwell.
So that was Jensen Huang at the Computex trade show in Taipei. We're staying with tech. SpaceX is preparing for what could be the biggest IPO in history, with a valuation that would instantly make it one of the world's most valuable companies. The listing is already forcing changes across Wall Street, from index rules to investment products, as investors position for Elon Musk's market debut. Let's get more now on our deep dive of the day from Danny Lee, Bloomberg's Asia aviation reporter. Morning, Danny. Just talk us through how consequential of an IPO this is going to be. Put it in context for us, and how exactly Wall Street's already adapting.
Well, Lizzie, good morning. So SpaceX is going to be the mother of all public listings, and as you said, will definitely be on track to be one of the biggest in history. And we're talking about $75 billion of funds to be raised on a $1.8 trillion valuation. That's astronomical, and it's the size of it in which is making and forcing market participants and Wall Street to try and adapt to the largesse of not just SpaceX and the size of the sums being raised, but potentially ones that are coming down the track. You know, as you said, though, the fact that SpaceX is trying to raise $75 billion, it's definitely one that is going to be more than double the previous largest IPO in history, that was Saudi Aramco. And with the fact that these rules are being rewritten, what we are seeing is the likes of these market participants, index providers especially, which are trying to adapt their listing rules to be more inclusive to the likes of SpaceX, to get them on the listings much sooner. And we have even ETF providers as well joining the fray and getting a whole slew of products ready that include the likes of SpaceX in some of their products. And so that's why it's going to be very consequential when you look at some of the offerings that are coming down the track, and when you deal with the size of the kinds of founders out there, you know, to get this listing right could definitely pave the way for more to come, and therefore more attention given this AI rally that we have seen over the years and so.
Yeah, what does it mean for those other mega listings that are being lined up, Danny?
Yeah, the fact that you have OpenAI waiting in the wings, also Anthropic, the fact that SpaceX, if the market can get this right, Wall Street can get this right, adapting to the rules, it really could encourage a slew more of these private firms to join in this capital markets rally, frankly. And so with the kinds of the challenges that are needed to deal with these size of issuances, the key thing is that by getting this right and encouraging more, this could definitely spur on a much bigger rally in equities thanks to this AI boom. So yeah, it's definitely one that we'll have to watch and wait to see how consequential of a listing SpaceX will be to encourage more to follow.
All right, it's a great read, Danny Lee. Thank you for bringing it to us. Bloomberg's Asia aviation reporter on our big take of the day. Now, to some other top corporate stories this morning. Berkshire Hathaway is to acquire Taylor Morrison Ho Corp for $6.8 billion in an all-cash deal. It's the conglomerate's first major purchase under Chief Executive Greg Abel, and the offer is at a 24% premium to the home builder's Friday closing price. Taylor Morrison CEO Cheryl Palmer will continue to lead the company. Elsewhere, HSBC is redoubling efforts to revive its flagging Hong Kong investment banking franchise. As competition intensifies in Asia's biggest financial hub, Bloomberg understands that HSBC has been deploying its top leadership to win back the market. CEO George Eldhary has sent tailored video messages to key clients across Greater China while pressing executives to engage with roughly 400 major customers ranging from buyout firms to hedge funds. So those are just some of our top corporate stories this morning, but plenty more coming up. We shall bring you some terminal charts to frame your day ahead. Stay with us. This is Bloomberg.
I expect that the way to think about it is when we get the straits open, and now there is actually a lot more traffic going through the straits than there was 2 weeks ago. When you get the straits open, then it's about 300 nautical miles per day for one of those big tankers. And so the people in Pakistan and India that have refineries that are mostly shut down are going to get their oil. They'll turn the refineries up, and then refined product prices will go down globally, and then it'll spread from place to place. But, you know, really it's like a month or two until everything gets back to the refineries.
Kevin Hassett, Director of the US National Economic Council, speaking there. And in our last few minutes together, I want to talk about volatility, low volatility specifically. We start off with oil. And as you can see, oil volatility is back in its long-term range. Now, flip the board over. That means that as policymakers monitor how oil prices are going to affect inflation data before they act, G7 FX volatility has also collapsed. And what does that mean? Flip the board one more time. Traditionally, historically, macro volatility readings this low have been reliable indicators of a sustained equity rally. So, calm waters could be good news for stocks. But to get all of these charts and all the charts we use on Bloomberg TV, in fact, terminal subscribers can use the function CHRT TV Go. Now let's take a look at the risk events on the docket for the week ahead. On Wednesday, we've got Broadcom earnings coming out. On Friday, the highlight of the week, non-farm payrolls, the jobs report stateside. Are we going to see Fed bets changing if we see real resilience in this labour market? More of it. And then on Sunday, of course, oil in focus. Given the geopolitical situation in the Middle East, we've got the OPEC ministerial meeting as well. The opening trade is coming up next. Anna Guy and Tom will take you all the way to the start of the European cash trade. Have a great week. This is Bloomberg.